Good morning. These are our team members. Today, we are going to talk about stocks and shares. First, let's look at the introduction. To grow a company requires a massive amount of capital. A company usually raises capital by selling shares of the company to the public. It is also known as equity financing. Let us take a look at the definition of share. A share is the interest of a shareholder in the company measured by a sum of money for the purpose of liability in the first place and interest in the second place. Initial public offering (IPO) is the very first time a company publicly sells shares of its company to the public in the open market. In Malaysia, shares of listed companies are all listed on Bursa Malaysia, and the price of shares fluctuates constantly. Now, we are going to explain about the types of shares. Ordinary share represents the equity ownership in a company proportionally with all other ordinary shareholders, while deferred share is a share that is issued to company founders that restricts their receipt of dividends until dividends have been distributed to all other classes of shareholder. Non-voting share is the share in the capital of a company which belongs to a class that has no voting rights, while redeemable shares are shares issued on terms that company will or may buy them back at some future date. Preference shares are shares of a company stock with dividends that are paid out to shareholders before common stock dividends are issued. Cumulative preferred stock is a type of preferred stock. Redeemable preference share combine the features of preference shares and redeemable shares.
Next, we will proceed to the advantages of share as a security. The four advantages is easy to create, cheap to create, easy to value, and also easy to enforce. It can be easily created on some simple mechanism and also standards, cheaper to create as a lower interest rate will be incurred, easy to value in terms of cash, and also easy to enforce as it can be used to settle the loan. Next, let us proceed to the disadvantages of share as a security. The disadvantages included limited tenure of the loan, limitation in acceptance of company share, difficult to monitor, value unstable, susceptible to fraud. First, it is difficult for the bank to monitor the quality of the share as the price is fluctuating every day. Next, every lender will usually have a specific list of shares that they are accepting. Furthermore, the value is very unstable as it may drop to zero. Moreover, the loan period will usually be short and the borrower will have to return in a short while. Lastly, security fraud may happen.
Quoted shares. According to Bank Negara Malaysia, quoted share means shares which have a limit, quota or restriction on the ownership by a foreigner imposed by the Memorandum and Articles of Association or any other constituent document of a listed corporation but which shares are not separately quoted on the exchange. Advantages of using quoted shares as security. 1. Little or no difficulty at all in determining the value of the shares. 2. Cost to use quoted shares as security is low. 3. Few formalities to follow when stocks and shares are offered as security. The last one is easily disposable. Unquoted shares. Shares which are not listed in Bursa Malaysia. Means of using unquoted shares as security. 1. Lack of regulatory framework. 2. Lack of a formal market. 3. Pricing and liquidity risk. 4. Difficult to realize profits.
In conclusion, share is a financial instrument that represents ownership in a company and represents a proportionate claim on its assets and earnings. The two main types of shares are common shares and preferred shares. Shares in companies that are listed on Bursa Malaysia may be offered as collateral to banks, while unquoted shares and shares in a private limited company are rarely accepted as a form of security. There are many advantages of stocks and shares as security, and the income received from the ownership of shares is dividend. Thank you and have a nice day.